Hey everybody, this is Jeff Morrell. Welcome to the September housing market update here for 2022. I am one of the co-founders of the Freedom Team here at eXp Realty, and we're about 3,000 agents nationwide in 47 states now. We're in multiple countries around the world. So I'm going to do this more on a national level. That's how I do this every month because of the fact we have agents all over the place. If you're a buyer or seller, this will be good for you as well. So today I'm going to be walking you through three of the most important topics really happening right now in the housing market. We're going to be going over mortgage rate projections from the experts. We're going to talk about home prices. We're going to wrap up on affordability, something that's definitely top of mind for almost everyone out there right now. So we're going to jump into things here. Let's open it up with mortgage rate projections from the experts. We can all probably agree this year in the housing market has truly been defined by rising mortgage rates. This right here, it's a look at the Freddie Mac 30-year fixed rate going all the way back to January of this year. And if you've seen my updates before, you've definitely seen this. But what it shows is how much mortgage rates really rose from the beginning of the year all the way into mid to late June. You can see the rise. And then really since then, you can see there's been a lot of volatility or fluctuation in mortgage rates here over the past few months. So why is that? Well, you've heard me say that inflation is the enemy of long-term interest rates, and that's certainly something that I'm following right now. We know that the Federal Reserve doesn't call mortgage rates, but they're certainly making moves right now to try to ease inflation. And when that happens, mortgage rates tend to respond. So we're watching all the different economic factors that impact mortgage rates and how that's playing out over time. It's certainly something, we're keeping our eyes on. And one thing that we can do in the meantime is we can turn to the expert to say, what are the projections for going forward? Everyone wants to know, where are the mortgage rates headed? Well, if we look at these projections from Freddie Mac, Fannie Mae, MBA, and NAR, these are the latest data we have as of August of this year. And if we average all their projections together over the next 4 quarters, what we can see over in that right-hand column is that mortgage rates are projected to essentially stabilize over the next year. So really looking at this, trying to figure out what's going to happen with mortgage rates, this is a great place to look for information and maybe a nod to the experts feeling that the Federal Reserve is going to get inflation under control. Well, we'll see as time goes on if that's the case. Then we do hope mortgage rates, will stabilize. So that's certainly what we're looking forward to, and hope that the experts are correct in these projections as we continue to watch all the economic drivers around us. And I think as we look at this, low to mid 5s is the projection, maybe even by next year at this time, dipping into the high 4s, we'll see. That could bring a lot of predictability for buyers. And I think that this next quote really says that well. This is from Lisa Sturtevant, a housing market economist that we follow. She says, after the end of summer lull, and as mortgage rates stabilize, we may see a return of buyers and a relatively strong fall housing market. So that could be great news. If mortgage rates do stabilize, we may see more buyers coming back in the market. We certainly know that rising mortgage rates have caused many buyers to step out of the home buying process. But with these projections at hand, should they play out, we could see stabilization in that and a very strong fall housing market. Certainly something we're keeping our eyes on, and we're watching to see what the experts say as well. So another topic that's on everyone's mind is home price appreciation. A survey of about 400 agents over the past month asked agents, what is the number one question that your buyers and sellers are asking you right now? One of the top ones that definitely rose to the top of the list, that is, what's happening with home prices? Where are home prices headed? So what I'm going to do today is break this down because, this is a really complicated topic. And I'm going to do my best to explain it because what we're hearing right now is home prices are appreciating, but we're talking about deceleration. And then we're seeing in some markets, sellers bringing their list prices down. We're seeing that here in Colorado Springs where I live. There's a lot of confusing information out there. And I want to do my best to share this with you. So what we're going to start with is this quote from Mark Zandi, chief economist at Moody's Analytics. And he says, I don't think national housing prices will decline in a meaningful way, but there will be some price declines across the country. So what does that mean? Well, on average, nationally, home prices are projected to continue to rise. We're seeing that in expert projections, but at the same time, we also know that there are some overheated markets throughout the country, especially out on the West Coast where there will likely be price declines. And you're probably seeing this in some of your markets right now. Again, we're seeing some declines right here. And so what I'm going to do today is bring context to this to show how home price appreciation is still expected going forward based on today's buyer demand and low inventory. But that does, what does that mean in the grand scheme of things? I think this chart, this graph that you've seen me use before, really helps to articulate this. This says the depreciation is slowing, not depreciating, and that's where deceleration comes into play. So let me walk you through this. This is percent year over year of home price increases for 2022 so far. And this data is from CoreLogic. The latest data was just released. And so what you can see here is that year over year, January, February, and March, home prices were still accelerating at a pretty rapid pace. Record-breaking home price appreciation at the beginning of this year. But what has happened since then? We've come off of that high of 20% year over year home price appreciation, and it's starting to cool off. And that's what you can see, May, June, July, that's the deceleration in prices. So what this means is year over year, July, let's say July of this year compared to July of last year, home prices were still 15.8% higher on the national average compared to last year. But that's a slower pace than that high of over 20% that we saw at the beginning months of this year, end of last year. So the pace of appreciation is slowing. That's deceleration. It's not depreciation, where we would have negative price growth, but here's where it gets confusing, because in some markets, we're also seeing that homeowners are dropping their list price, for example. So let's say you have a client whose home could have sold for $400,000, 3-4 months ago. Well, now that home would only sell for, say, $370,000. Well, in that case, it feels like depreciation. And that's because home prices are measured in a couple different ways. So year over year, what you're seeing here is continued appreciation at a slower pace. But month over month, we're certainly keeping our eye on that because that's what our clients are looking at. That's what they're feeling if they're thinking prices are going down. And so we're going to keep our eye on this home price appreciation. We still know that there are plenty of buyers out there. There's still low inventory. We know that prices are projected to continue rising, but at a slower pace, again, on a nationwide level. So we're going to keep our eyes on all this. And truthfully, what this means is that a year ago, the listing price was the floor of the negotiation. You could list a home, you could maybe list a little higher than what you thought it was worth, and then buyers would still come in, multiple offers, bidding wars, bid the price up for a home, all the things we've seen, earlier this year and last couple of years. That was the floor of the negotiation. What's happening now as the market starts to shift is that the listing price is probably more the ceiling of the negotiation. Buyers have a little bit more negotiating power. We're seeing changes month over month, and that's what we're keeping our eyes on. So home price appreciation is slowing, not depreciating on an annual basis. And I think this quote from CoreLogic really helps to articulate that. It says, annual home price growth slowed for the third consecutive month in July, but remained historically elevated at 15.8%. That's the graph that we just showed you. As 30-year fixed rate mortgages neared 6% this summer, some prospective home buyers pulled back, helping ease overheated and unsustainable price growth. We know the past 2 years have absolutely been an anomaly. The price growth over the past year in particular was unsustainable price growth. Looking ahead, CoreLogic expects to see a more balanced housing market with year-over-year appreciation slowing to 3.8% by July of 2023. So by July of next year, CoreLogic, at least they're projecting that homes will still be appreciating in value, but at a much slower pace. Now, that's that deceleration continuing, and this is much more in line with what we're seeing from the Home Price Expectations Survey and what they're saying for continued price growth. Higher this year and a little bit more towards a normal range next year and beyond. Leading up to the pandemic, the average or typical home price appreciation over a typical year was about 3.8%. So that's what experts are starting to see as they look forward. However, what I also want to walk you through is many experts raised their home price forecast this year. So this is very typical. What you can see here, these are January forecasts for 2022 home price appreciation. That's what you see in the middle column compared to the latest forecast, and those are in the right-hand column. So what usually happens as you start a calendar year is the experts project out, what do we think home price appreciation is going to be this year? They're looking at buyer demand, they're looking at supply, inventory, all the different things that drive home price growth, and they project out for the year. Well, as the year goes by, experts tend to reforecast based on what's actually happening in the market. And so that's what you can see here is that this year, experts, even though prices were decelerating, reprojected a higher home price appreciation for the 2022 calendar year. That's what you see right here. So, we're hearing all these different terms. We're seeing these home price forecasts. Trying to make sense of it all can be very confusing. But what experts really saw at the beginning of the year, they thought that we were going to see more inventory coming into the market. There has been more inventory, but it's still lower than normal. Buyer demand has definitely softened in the last couple of months. What's going to happen here? They reforecast up, and that's what the orange column is showing you here from each of these experts. So what does this look like for 2022? I've shown you this before. The latest home price projections for the year, and the average of all 7 forecasts that we follow is showing 11.3% annual appreciation for 2022. Now again, this is nationwide. Now, what we have to remember is that the majority of that home price appreciation happened earlier this year. It happened at the beginning of the year. We're seeing that softening, but experts are still projecting by the end of the year 11.3% home price appreciation for 2022. So why is that? Well, inventory is still historically low. And if we look at this data from calculated risk, this helps us compare where we are today versus where we were over the past few years. So if you look at that blue bar on the left, you can see that inventory is 26.3% higher than it was the week ending September 2nd of last year. So year over year, comparison for the last week of August and into the first couple days of September, 26.3% more inventory than last year at this same time. So that is creating more opportunities for buyers. It has helped with the softening of home prices for sure. But compared to the same week in 2020, inventory is still down 5.4%. And compared to 2019, prior to the pandemic, inventory is still historically low, down 42.2% from where we were that same week in 2019. So that's what's continuing to drive upward pressure on home prices. Inventory is still low. We still have buyers in the market. Yes, we're seeing a softening, a cooling, a slowing, but home prices are projected to continue rising primarily based on this inventory data as well. Now, let's go through the rest here. Let's go through this. The latest on home affordability. This is a topic I think that comes up in a lot of cases, mainly right now in the media, people saying are homes even affordable right now? And I want to break down affordability from a couple different angles. So if we start here, right here, the Housing Affordability Index that NAR releases, they release this, every month, okay? Housing affordability right now is lower than it's been going all the way back to the early 90s. This is a look going back to 1990 and housing affordability. The way you read this is the higher the bar is, the more affordable a home is. And right now, you see the red bar below the years that we showed here going all the way back to the 90s. And what stands out are the years of, after the housing crisis where distressed properties dominated the market. The high of that market, the Housing Affordability Index read 197. Right now, we're at 98.5. Now, the way you read this is a 100 reading of the Housing Affordability Index is really an even reading. That means the average individual, the average household in this country can afford 100% of the average mortgage payment. So it's even, right? You make enough money to afford an average home, and that is even affordability. And we've gotten a lot of cover from interest rates over the last several years and seen great affordability. But right now, the average household can afford 98.5% of the average mortgage payment. So less affordable. You could maybe even say unaffordable. You're going to see that in some places, definitely you're going to see that, but certainly not an apocalyptic type scenario by any means in housing affordability. Now, that's based upon 3 things. It's based on the prices of homes, it's based on interest rates, and it's based on wages. That's how they come up with the Housing Affordability Index. So based on where this is heading in the future, what do you believe about prices, interest rates, and wages in this country? That'll help you as a realtor give expert advice in this affordability category because a lot of people are asking those questions. If we continue on this, NAR came out with this very interesting point about mortgage payments. Look at this. Compared to 1 year ago, the monthly mortgage payment rose to $1,944 from $1,265. That's an increase of 53.7%. So homes are less affordable right now, and mortgage payments have been increasing. Okay. If you look at this graphically, this is what this looks like going all the way back to April of 2020, up to the last reading here in June. That's the most recent information that we have in the statement that I just gave you from NAR. No doubt, as people have gone through the pandemic, the meaning of home has changed. And they've said, you know what? We're willing to pay for what we want. And we're seeing that right now in rising mortgage payments across the country. Another thing we want to look at when we start to break down affordability is we want to look at what is the average income committed to a mortgage payment. And right now, that sits at 25.4%. That assumes a 30-year fixed mortgage rate with a 20% down payment on a median priced home with median income. So go back to the affordability equation. The median income, the median priced home, somebody is dedicating 25.4% of their income to a housing payment. Why is that important? Well, if you look at this, 25% is typically what is recommended. We're slightly above that. Now, again, I'm going to go back to, not an apocalyptic scenario, but if you hear that word affordability coming out, you can give context to that and what that means. As you think about housing, one of the greatest benefits of buying a home versus renting is you benefit from a refinance as rates dip in certain times. Now, please hear me on this. I'm certainly not suggesting that somebody should buy a home based on just the opportunity to possibly refinance. But it is something that we want to remind people that you can buy now and as prices rise, which is certainly what is projected over time. And if there's an opportunity to refinance, you can do that down the road. And that's very, very important for those that own homes. A lot of us have done that. This is all about incomes and qualifying incomes and looking at what people are making and what the price of the home is and certainly what the interest rate is. And that helps us break that down. If we further break this down, if you look at median household income versus qualifying income, here's what becomes very, very clear is this is not the same across the country. If you go look at the West, the qualifying income, what you need to make to buy a home in the West is significantly higher than what the median income is. In the South, they're neck and neck. In the Midwest, median income is higher than the qualifying income. So bring in your local information, wherever you are as a realtor or a buyer or seller, and what you're seeing happening in your market, it's critical in this conversation. But being able to be educated as a realtor, being able to bring the truth about affordability, to people is what we have to do. As realtors, you have to look at this. If you look at this graphic here in the U.S., sort of neck and neck, across the board, the median income in this country, $91,952. Versus a qualifying income needed, $93,312. So certainly seeing the rise in interest rates, it is lessening the buying power of consumers relative to housing across the country. So something I want to stay on top of, for sure. As a realtor working with buyers, or if you're a potential home buyer watching this, 3 things I think you can do right now or coach people that maybe are struggling with affordability. First, you can expand your search area and criteria. Somebody that maybe was looking at buying a home near the city center or downtown, maybe you need to look a little bit further out or look to where things might be more affordable than in the area that was your first choice as a buyer. So that's one thing you can do. Second thing you can do is explore alternative financing options. If you're an agent today that doesn't have a great lender partner, I'm going to encourage you to find a great lender partner in your market that can help folks understand, this is what you qualify for. These are the products that are available in this market. This is how you can manage that debt based on what we've seen in rising prices and rising interest rates. I think it's critically important to explore those alternative financing options. And please hear me, this is in no way telling people you should go out and buy something, with the intent of refinancing, like we just said, not at all. But understanding what's important to you and how do you structure that debt. What are the options out there that may help you do that more affordably? The third thing you can do, you can look for grants in your area, gift funds. There are resources like downpaymentresource.com. It's a great organization. You can go in there and say, what are the down payment resources? What are the resources that are available in my community for those that are looking to buy? And those are arranged in a number of different ways. But a lot of times, think about a first-time home buyer down payment, a credit or grant or something like that. But look for those options. Look for gift funds. Are there areas where people can use gift funds to get into a home and combat rising affordability? So I think there are things we can do, and we can give great advice in this, understanding this topic and being fluent in it. I'll wrap up with this. Ollie Wolf from Zonda said this, we're in a place where strategy discussions and planning are critically important to make sure we can thrive during these challenging times. Stay nimble, stay informed, and remember, housing is traditionally one of the first sectors to slow as the economy shifts, but is also one of the first to rebound. We've done a lot of work on recession, and that topic continues to come up as we see the economy slowing, but staying nimble, staying informed is key. So as a potential buyer, or seller, I want to offer you this. These just came out, our fall buyer and seller guides. They're now available, loaded with great information. You can find them on our website. You can see the link right there. I'll also put the link, down in the comments or the description here, below. My goal, guys, definitely just to keep you informed as realtors, as buyers, sellers, keep you up to date on a national level. Again, our agents, from Freedom Team at EXP all across the country, 47 states, great agents. Regardless of what company you're with, I just want to make sure you know this. You're always welcome to join us every Tuesday, 11 a.m. Eastern Time, 8 a.m. Pacific, for a weekly mastermind. Guys, these have been so good. We've been doing these now for over almost a year now, and just they're phenomenal. You can see the Zoom ID right there. Jot that down, whatever. Get back to whoever got you on this video. If you want to check it out, whatever, you can come join us. We don't talk anything EXP. This is all just to help you with the shift. It's to help you with production. Some of the top agents in the country getting on there on a weekly basis to help. If you're a buyer or seller, be sure to work with a good, solid agent. No matter what company they're part of, you need a good, well-informed agent now more than ever. Don't try to navigate your way through any of this on your own. Markets are shifting on a weekly and even a daily basis in some places right now. If you're a local buyer or seller here in Colorado Springs, Pueblo, Castle Rock, or Denver, reach out to my wife or me. We'll dive deep into all of our local numbers and statistics so we can help you make the wisest and best decision for yourself, whatever that is. Be sure to subscribe to my YouTube channel. Whether you're a realtor or a future customer, you'll find daily updates and help in many, many different areas. So, guys, thank you very much. I'll be back here in October for another monthly market update. I appreciate your time getting on here. Really do appreciate it. Hopefully this is some helpful news. This is changing on a daily basis, all over the place. So we'll definitely be back here in October to keep you updated with what we know, and we'll go from there. So guys, thank you again. Have a great month of September here. We'll see you next month. Bye-bye.